Happy Sunday, everybody. Welcome to Mornings with Michael, weekend update on April 21st. Been working on a special project the last few weeks, so I did not have a show this week. So I apologize for that, but soon it'll be coming to an end and we'll get back to our regular schedule. Everything on this show is for information and educational purposes only. So do your own due diligence. And much like I anticipated and warned, the market has turned. So let's kind of share the screen first. We'll take a quick look. Here's the QQQ. And an unexpected move right here. That was a troubling sign. Market tried to move higher and then turn lower. And then it moved higher, but it all did not go beyond this range. So that's an inside day, stayed inside the previous range, stayed inside there. This day looked pretty good. And then what happened the next day? It went down to the 50-day moving average again. Some people were saying this was a breakout. The market was going to move higher. Well, it didn't. And here's what you can see. All the volume was higher. Look at these red days. The count was getting higher. This is kind of a foreboding. And definitely right here, a lower volume day the following day didn't move too much. And low volume on the buying. You want to see low volume on the selling and high volume on the buying if you want the market to go up. So here we had high volume and the stock couldn't move up. Following day it did, but it went on very low volume. That was not the day I was looking for. It's right here. And then the next day, higher volume, and it closed down to the 50-day moving average. And this is Friday, I believe, Friday or Monday. And it just sliced right through the 50-day moving average on higher volume than the day before. That's not what you want to see. And then we got lower volume up here, did not move very much. It's kind of a railroad track almost from the previous day. And then it just kind of rolls over and continues to roll over. And you can take a look at some of the high flyers in the AI area. This is what happened on Friday. SMCI looked like it was getting above the 50-day moving average, and then boom, it just comes right slicing down over 200 points. Look at that, down 23%. And then let's take a look at one of the semiconductors, ARM. Look what they did over here, slice right through the 50-day moving average and just continues sliding on down. It's not what you like to see. We got higher volume here, slide through the 10 and 20-day moving average. Tried to move higher, but turned its tail and came right back down. See, that's the trouble when you slice through these averages. What before was support now becomes resistance, and it can't get back up there. It's actually becomes, if it does get through here, it often is a good time to short it. And you can see what happened there. Take a look at what happened to NVIDIA, leader in the market. Slice right through its 50-day moving average off 10%, 84.71%. Many people are saying this is going to be 2 or 3 months before the market does anything. Not sure what. Oh, yes, let's take a look at Ulta. Ulta Beauty was a warning sign as well. Said sales were slow, crashed right down here. One of our holdings, Elf Beauty, went down big time with that, and then thought it was getting support, had some nice volume here, and then on Friday it just sliced right through it. Take a look at Bitcoin, was an early warning as well. So you got up here to new highs, sold off, came under the 20-day moving average, bounced up, but it has not been able to get any movement there. Most of the things are red lines. Let me just stop the share for a moment and I can go over to our other Bitcoin chart. Here we got it right here. You can see it went up here to 72,825, 73, pulled back. And if you kind of look back, you can kind of see this is the left shoulder, this is a head, and this looks like a right shoulder here. And it's trying to come back here, but with the halving coming up, I believe the halving was supposed to be today. We'll kind of see where that goes, but that's kind of where the market kind of sits right now. Share the screen here, go back here. We can look at the S&P 500 as well. And then we'll go to S&P 500, slice through the 50-day moving average, much like the NASDAQ. What do we got? We got like a stale red light here. 1, 2, 3, 4, 5, 6, 7 days in a row. And then look at that volume. Could have a bounce here, but any bounce to come up near the moving average, we'll take a look, go back. Let's go see if we can bring up last August, see what happened there. August. This is September. I want to go over here to August. Actually, let's go to the QQQ for August. So this is 616. I think it was actually August of 2023. Let's just change the date and see what we got here. Now let's change this to the daily. So this is, what's the date here? This is July. As we can see, what happens when it's sliced through the average here? Pull back here, try to get higher. Let's just move forward with the date. Slice through once again, comes down lower, comes down lower still. So it took all the way from August, so this is the double bottom, this to November before it healed itself. Now this is just the index going down. Many of the other high multiple stocks are going to go down a lot more than this. Now, the question you have to ask yourself, if you want to lose all that traction, because that's no way to get ahead. It's taking it in a loss because you're a long-term investor. But you need to do your own due diligence. So it didn't get above where it had lost from 387.98. Until November 20th. So let's take a look at this day. That's July 18th to November 20th. Just kind of mark this. So July, August, September, October, most of November. So these things take time. Once there is a pullback, it's healthy for the market to have a pullback, but you don't have to be like mutual funds and where they're required to hold 95% of the market. You can go all to cash and be ahead once the market is ready to take off again. So that's kind of the story there. Let's go to the PowerPoint. Well, first let's look at, before we go to the PowerPoint, let's go to the heat map. So all of technology is down. Microsoft down 1.27. We saw Nvidia. All the semiconductor stocks were down pretty strong. Apple, Google, Facebook, Meta down over 4%. Amazon 2.5%. Tesla keeps sliding. And Eli Lilly was down 2.63%. Energy was up slightly. We had some little pockets of strength here and there. But that's the story there. Not sure if I actually shared that. So let me go back here. Share screen. There we go. And here we are. That's what we were talking about. Stop our share. Share screen if you don't want to worry about that. Let me just pull this up. See why it's not bringing up my screen. Here we go. If you don't want to worry about all that, there are places you can invest where it'll give you a 45% bonus. And annuity average, you can see beats index investing by about 5% per year and go up, and never come down. If you spent a lifetime building up a nest egg, you don't want to lose it. If sometimes a 5 to 10% correction turns into 20 to 30, or like in 2008, turned into a 54% correction, and it took quite a while to return. So if you don't think you have that time on your side to overcome that, this is a good place to be. We just put some people into this annuity and gave them 45% income bonus, and they can still invest in NASDAQ, S&P indexes, along with other choices. So if you want to learn more about that, feel free to contact us. So that is that. Let's go to our PowerPoint presentation. Word of the day is puerile. Adjective, childishly silly and trivial. The puerile pranks earned the boys a few weeks detention on top of the punishment their parents gave them. So that is our word of the day. And here is the bull bear ratios, investors intelligence versus AAI surveys. As you can see, the market, when the market was starting to turn down, this kept going up. This is often the reverse of what you would expect. So as more people get excited, professionals start to take their chips off the table. This is from March 28th. It was at 2.23 average over time, right through the middle here. And right up here, this was April 2nd. It was just streaking higher. So there you have that. Rates surpassed 7% for the first time this year in real estate. Home buyers came into the year with some hope going into March. So a lot of people expected the market to, the Fed to lower interest rate 3 times. And professional money managers were even talking about 6. And now the rug is being kind of pulled out from everybody. And some people are even saying there might only be 1, if that. So that's going to put pressure on banks, on small companies. And we'll look more into this as we go through the PowerPoint. Jay Powell just made buying a home this spring even more challenging. Let's go back to that screen. Here's a median asking price, $413,000. Median sale price, $380,000. Now, the real state of our economy, a lot of these things are just going down the toilet. Bed Bath & Beyond is closing its remaining 360 stores. Regal Cinema has closed 429 movie theaters. Big Lots closing stores in California and Colorado. Kroger, maybe in California because of the new minimum wage. Kroger grocery chain has closed 413 stores. Bank of America is closing 20 branches. Walmart is closing 23 stores in 8 states. Target closing 9 stores in 4 states. Capital One is closing 50 branches. Boston Market is closing 27 stores. Dollar Tree is closing 1,000 stores. They're completely going out of business. Foot Locker is closing 400 stores. Burger King is closing 400 stores. Home Depot is closing 15 stores. I can't quite read this bank, but it's closing 23 branches. Walgreens closing 100 stores. Starbucks has closed 61 stores. Sears closed all but 22 stores. Party City is closing 24 stores. Best Buy is closing 20 stores. Lowe's has closed 50 stores. Macy's is closing 150 stores. Gap is closing 350 stores. And Kmart only has 2 stores left. And everybody is afraid to use the word recession. And just look at this chart. The U.S. freight recession keeps getting deeper. J.B. Hunt stock slid as much as 13% on Wednesday after an earnings report that missed estimates. Demand for freight services was weaker than expected in the first quarter. The firm is a bellwether for the freight industry, which has been mired in a post-pandemic recession. Investors pull $143 billion from the fund market, marking the largest weekly exodus since September 2009. Spider 500 ETF trusts, SPY, AGG, IWM, the Semiconductor Index, IEF, LQD, and IVV. So Last week we talked about engulfing candles. This is what a bearish engulfing candle looks like. And on our next, this one engulfed 3 days. So let's take a look at our indexes last week. So in the Dow Jones, it engulfed 2 days. And the small capitalization Russell 2000 index engulfed 2 days. Actually, it looks like 3 days. These three. And the NASDAQ engulfed 2 days, 2+ days. And the S&P 500, 1.5 days. Now I neglected to, one slide did not get put in here. I just want to put it in here now. Just kind of go over this. This is our checklist. This is from Sticky Trades, AJ Monty. So this is how you come up with your checklist. Bullish, bearish, engulfing, bearish, check mark, bullish, bearish, Harami, shooting star. These are the type of candles. We just got a bearish engulfing. Up or down volume compared to the trend. We had up volume and a bearish move. 20-day SMA divergence. So it has come crashing through the 20-day gaps, the 80-20 rule. Stochastics and CCI, and roll reversal. Was this a recess bounce or a breakout? So that is our checklist. And let us come back here. So this is Dow Jones Industrial Average. We thought this was going to bounce. I'm just going to bring up our targets for next week. My little notepad here. So the target for the Dow Jones Industrial Average is 381.81. So what did we have? We had a stale red light. 1, 2, 3, 4, 5, 6, 7. Actually, forgot to count that. These two. 1, 2, 3, 4. But I guess we didn't have all in a row. So this one was a doji. Let's just start here. 1, 2, 3, 4, 5, 6, 7, 8 days in a row. And typically with this many days in a row, you will have a bounce, and that's what we had. The stochastics and the CCI are all trending up. So it's possible that we could see continued. The volume was higher over here. And why would this be that the Dow is moving up? Well, like I said earlier, 90 to 95% mutual funds have to keep 90 to 95% in the market. So where do they go? They go to the bigger, safer companies, which are usually in the Dow Jones Industrial Average. So Caterpillar, Dow, Boeing. So that's where they're moving to. This is a footprint showing you what they're doing. Here's a small cap index. It's very similar to what we saw in the Dow Jones. It was down 1, 2, 3 out of 4 days in a row. And we got a bounce here. Looks like we're starting to turn on the stochastics and the CCI. So it's possible we could get a little bit of more of a bounce here. QQQ, look at this. 1, 2, we'll call that a 3, 4, 5, 6 days in a row. Starting to get a turn. This one tried to move up and then pulled back down. High volume here. We may have some selling on Monday, but I think we could possibly get a bounce. But what is the problem here? We have crashed through the moving average, and now this turns into resistance. So what traders do when it comes up to here, they will start selling again. And until they get some better news or whatnot, they're going to continue selling. As we looked back last July through November, once this move happened, it takes a long time to straighten it out. So that's kind of the story with the NASDAQ, S&P. Got 1, 2, 3, 4, 5, 6 days in a row, starting to flatten out on the stochastics, and the CCI is turning up. We had a higher volume sell-off here, possibility another day of selling on Monday. Possibility may be a strong bounce. Sometimes the professional money managers make a move to get people to buy in, think it's all over, and then they whoosh, flush some more down the drain. So here's our monthly, as we were showing. Here's what happened. Went through the moving average. Blue line is the 20-day, 50-day. I believe this is 100 and this is a 200. And so what it came down, tried to come back up here, and then it just rolled over again. So this is 1, 2, and 3 waves down before it was able to pick back up later in November. So this is what we're foreseeing right here. Most people are saying 2 to 3 months before this thing is going to be even worth looking at again. So this is a VIX. The VIX, huge pop up here. Maybe a little bit of extreme reading. Think this could pull down. This is probably when we get a bounce in the market, and think it can pull back up. So we just looked at the numbers for the Dow. The number for the IWM is 195.64. On the QQQ, we're looking at pullback to 412.68 and then a bounce to 419.57. Pull back here a little bit more, right around 414, and then bounce to 419.57. And then on the S&P, so we're looking for a pullback to 492.21. I believe it was at 495.16, and then a bounce to 498.91. And then on the VIX, we're looking, so it went all the way to 21. We're looking at a pullback to 1809, right to this dotted line here. And that's the way we foresee things next week. So let's stop the share. Let's go to a regular routine and kind of see where we are. First, let's bring up the dollar index. Dollar dropped 2 days in a row off 9 cents on Friday down to 29.21. Silver kind of looks like it's trying to fill the gap here. It moved up to 22 and then sold off and gap down on Friday. Gold kind of fill the gap here. We'll see if it can bounce on Monday. Take a look at copper. Had a strong move on copper on Friday. Or oh, I think we're still in the wrong date. So let me get back to here we are. Let's go back to start fresh with the dollar. Dollar pretty flat at 28.90. Amazing. It was pretty close to the numbers we were looking at there, even though it was like a year ago. Gold. Gold remains pretty strong. We got like 1, 2, 3, 4, 5 days in a row pretty tight. Silver. Silver bouncing off of the 10-day moving average, moving higher. Copper. Look at that. It's pretty close to a gap up here. Definitely got a gap up on Friday. Got a pullback with arrow copper to the 20-day moving average. Southern Copper pulling back as well. FCX pulling back. Vale actually got a bounce in Vale. Wow, up 2.87%. BHP over in Australia got a little bit of bounce, got above their 50-day moving average. And finally, Rio bouncing as well. So let's BTC. I know it's been moving today, got up to 65,000. Had a little bit of a bounce on Friday. And let's take a look at Ethereum. It is bouncing a little bit over the weekend as well. So that's a look there. 0TNX. Look at our bond yields. Bond yields had pulled back a little bit, but maybe that's why the small caps actually bounce. The 20-year yield pulling back a little bit as well. Here we can see the VIX. Look at that huge move here. Moved all the way up to 2140, 2136. And let's see, it closed at 1871. So we're saying pull back to 18, I believe it was 1809. Yeah, 1809. Yeah, we just dove under 500. So moved to 492.21 wouldn't be too much, and then a bounce from there. Take a look at RSP. It's actually up for the day. So people think they're broadening out, getting out of the high multiple tech. That is a slight positive. The NASDAQ falling down. See what the equal weight is doing. Looks just as ugly. IWM, where we got that slight bounce. Pretty good volume. Some of that may have been on the sell-off. And our Dow Jones, as we said before, bounce up 0.5%. So where was all the big money moving? So American Express. Looks like we got a breakout in American Express on Friday. Pretty huge volume. The earnings came in at 39%. And Criteo, ADR, French provider of advertisement, and it looks like it's trying to get out in the breakout area as well. Pretty good volume 3 days in a row. Let's see what was up, 5%, 100% increase in volume. American Express, which we just looked at. Bank First. Big volume. Earnings came in at negative 13%. It must have been bigger than what people were expecting. Cohen and Steers. Got a gap up here. Huge volume in Cohen and Steers. High of 73.91, up 9.5%. Fine. Let's see, we got 9 items actually. Fifth Third Bancorp bouncing. Your earnings down 7%. Pretty big volume there. Glacier Bancorp, as we can see, we got a number of banks in here. Their earnings down 47%. Maybe people are thinking not as bad as they thought it would be with interest rates up high on all these banks for a long period of time. Green Plains, distribution of ethanol and corn oil. Wow, look at all that volume. I got above 3 major moving averages, up 5%. Metropolitan Bank, gap up and closed near its high, up 18%. Trump Media and Telecom, really sold off heavily here, and then somebody started buying. 3 days up in a row, up over 9%. But we got all this overhead supply here. So all these people that bought over here, big potential for them to start selling once it gets close to where they bought it at. And UGI, holding company interest in propane and butane distribution. Huge volume here, up 8.2%. What was up 10%, 200% increase in volume, and we got nothing. So what did we do on Friday? So we had 50 shares of NVIDIA, and we sold 30 of them after the close. 600 shares of Elf Beauty. Sold 100 shares of that, and we'll kind of see where that sits after that. What else are we looking at? We had close Celsius earlier in the week. It continues to get weaker. I believe we sold it around 72. And what else have we got here? Netflix had an ugly drop after their earnings. We're going to have to try to reevaluate that one. I had trouble with working on an outside project year away from the market and can't really take care of everything. But that's kind of a look where things set. Meta, we'll just go look around the big cap tech. Meta is down 4%, down $20. Google actually holding strong, bouncing off the 20-day moving average. All these leaders have earnings next week. Apple continues to dive down further. Our 175, 170 put is actually doing well. Interesting, I looked at ARM. We had a put spread where we shorted the 130 and bought a put at 124. I guess since the 124 was so far out of the money, now that put spread is actually making money for us. So we'll have to reevaluate that on Monday. And now, so let's take a look at Amazon. Amazon has fell through its 50-day moving average as well. Tesla just keeps sinking. Fell below $150 on almost 2%. Take a look at Eli Lilly's chart. Yes, it's come severely down through its 150 on the bottom of this kind of flat base. We'll see if it can stabilize. Take a look at some of the leading ETFs. Oil pricing fell and then bounced up slightly. We had gotten out of this one right over about here. Look at the financials. Actually got a nice bounce on the financials on Friday. JP Morgan up. Wow, look at Wells Fargo, just clearly went above $60. That's definitely a breakout. Right there, broke out. And 59.13 was the high. Take a look at energy. Got a bounce in the energy. Communications is going to be down, slice through the 50-day. Utilities. Well, it's getting pretty close to breaking out. Otter tail bouncing off the 200-day here. Real estate getting a slight little bounce as a pullback in the bond yields there. Biotech, wow, continue to move down. Got a little bit of a bounce on the other ETF there. Software, along with the NASDAQ, just continues to fall. Technology falling like fashion. Infrastructure fall after this huge move has come through the 20 and now the 50. Our semiconductor index. Yeah, look at this. It's like a falling knife. Can't get out of the way fast enough. Jets. It's up slightly. Leisure activity. Yeah, they slice through the 50-day, continue going down. Industrials, unlike the Dow Jones, continue to fall. Healthcare sector actually got a little bit of a bounce here, up 0.38%. Consumer staples got a big move here. Like I said, a flow to safety, and consumer staples is area of safety. Building materials, actually pretty flat here. Just kind of riding this line. Metals and mining, kind of flat. Kind of bouncing a couple of the steel companies. US Steel is treading water. Home builders, it sliced through the 50-day moving average last week and continued down. And Fang Yu continues pretty sharply in negative territory. See if there's a short here. Take a look at a couple of shorts. No, that wasn't it. There's a short in the S&P 500. Look at this. 1, 2, 3, 4, 5, 6 days in a row. Guess oh, here we go. Here's the short on the NASDAQ. We got 1, 2, 3, 4, 5 days in a row. So this is a 3 times bull on the small cap. See if we can find a short version. Not at the moment. And take a look at the short version on Bitcoin. Pulled back the last couple of days, but had 1, 2, 3, 4 days up in a row. And that's our show for today. That's our weekend update. Hope everybody's had a great weekend. And please take care of yourself. And we're in a risk-off environment right now. So there you have it. Hope everybody has a great start to the week on Monday. This has been Mornings with Michael for information and educational purposes only. You need to do your own due diligence, but keep going out there working on your goals, working on your activities to lead you to the promised land of getting your goals and then reset more goals to continue amazing everyone around you. In the meantime, have a great week.